Hello, everyone. I hope you all are doing great and keeping yourself safe. We've all heard that death and taxes are inevitable. Well, dying can be inevitable. However, taxes are not. With a few tax making plans, you could owe much less cash to the IRS on the give up of the year. Here's a short observe some steps you could take to lessen your taxable earnings and the taxes you'll owe. These are fundamental tax saving techniques that each taxpayer ought to know. They do not contain offshore financial institution bills or convoluted tax shelters. These tax making plans gadgets are smooth to recognize and place to use, are maximum possibly to shop you, the common taxpayer, cash. Let's begin. Tweak your W-4. The W-4 is a shape you supply in your employer, educating it on how plenty tax to withhold from every paycheck. If you obtain a big tax invoice this year, you don't need some other marvel subsequent year. Increase your withholding so that you owe much less whilst it is time to record your tax in turn. If you obtain a big refund, do the alternative and decrease your withholding. Otherwise, you may be needless dwelling on much less of your paycheck all year. You can extrude your W-4 anytime. Stash cash for your 401k. Less taxable profits approach much less tax, and 401ks are a famous manner to lessen tax bills. The IRS doesn't tax what you divert immediately out of your paycheck right into a 401k. For 2020 and 2021, you could funnel up to $19,500 according to your year into an account. If you are 50 or older, you could make a contribution of an extra $6,500 in 2020 and 2021. This retirement money owed is typically subsidized with an aid of using employers, even though self-hired humans can open their personal 401k. And in case your agency fits a few or all of your contribution, you'll get loose cash to boot. Contribute to an IRA. There are primarily styles of man and woman retirement accounts, both IRAs and conventional IRAs. You are capable of deducting contributions to a conventional IRA, even though how a lot of you could deduct relies upon whether or not you or your partner is protected through a retirement plan at painting and what kind of you make. For the 2020 tax year, you can now no longer be capable of deducting your contributions if you've protected through a retirement plan at paintings. You're married and submitting jointly, and your changed adjusted gross profits were $124,000 or more. In 2021, that range arises to $125,000. There are limits to how a lot of you could install an IRA too. For 2020 and 21, the boundaries are $6,000 consistent with year or $7,000 for human beings 50 or older. You have till the tax submitting closing date to fund your IRA for the preceding tax years, which offers you more time to take gain of this strategy. Few humans provide an awful lot notion to their tax submitting repute. However, it is able to have a massive impact on the tax you pay. Which submitting repute you choose will decide the tax bracket you fall in. Your submitting repute is likewise important for calculating your trendy deduction. You owe it to yourself to examine these fundamentals, approximately tax making plans, and the way they are able to assist you. The quicker you begin to take gain of these tax saving strategies, the higher off you'll be at tax time. Then you could relaxation confident, which you aren't one of the many humans paying an excessive amount of cash to the IRS. Save for college. Setting apart cash for junior lessons can shave a couple of bucks off of your tax bill too. A famous choice is to make a contribution to a 529 plan, a financial savings account operated with the aid of using a country or academic institution. You can deduct your contributions in your federal earning taxes. However, you are probably capable in your country go back if you're setting cash to your country's 529 plan. Be aware, too, that there can be present tax effects in case of contributions plus some other presents to a selected beneficiary exceeds $15,000. If you're in a high tax bracket, you can save substantial taxes by shifting your income to someone in a lower tax bracket, for example, your children. This process is called income shifting or income splitting. The Tax Cuts and Jobs Act made changes to the kiddie tax that made income shifting to children easier than in the past. Fund your FSA. The IRS helps you to funnel tax unfastened greenbacks without delay out of your paychecks into your FSA every 12 months. So, in case your organization gives a handy spending account, you would possibly need to take gain of it to decrease your tax bill. In 2020 and 2021, the restriction is $2,750. You'll need to use the cash at some point of the calendar 12 months to clinical and dental expenses. However, you would possibly additionally be capable of use for it associates normal objects together with bandages. Being pregnant, take a look at kits, breast pumps, and acupuncture for yourself and your certified dependents. Some employers would possibly allow you to convey cash over to the following 12 months. Subsidize your dependent care FSA. This FSA with a twist in some other available manner to lessen your tax bill in case your business enterprise gives it. The IRS will exclude up to $5,000 of your pay, which you have your business enterprise divert to a dependent care FSA account. Because of this, you'll keep away from paying taxes on that money. That may be a big win for mothers and fathers of youngsters below 13 due to the fact before and after college care, daycare, preschool, and day camps commonly are allowed uses. Elder care can be included too. What's included can range among employers, so test out your plan documents. Rock your HSA. If you've got a high deductible fitness care plan, you'll be capable of lightening your tax load by contributing to a fitness financial savings account, which a tax exempt account you could use to pay clinical expenses. Contributions to HSAs are tax deductible, and the withdrawals are tax free too, as long as you operate them for certified clinical expenses. For 2020, when you have self-best high deductible fitness insurance, you could make a contribution up to $3,550. For 2021, the character insurance contribution restriction is $3,600. If you've got your own circle of relatives with high deductible insurance, you could make a contribution up to $7, $100 in 2020 and $7,200 in 2021. See in case you're eligible for the Earned Income Tax Credit. The regulations can get complex. However, in case you've earned much less than $57,000, the Earned Profit Tax Credit score is probably really well worth searching into. Depending on your profits, marital popularity, and what numbers of kids you have, you would possibly qualify for tax credit score as of much as almost $7,000 in 2020 and 2021. You'll have to pay income tax on your taxable income sooner or later, but you'll usually be better off if you make it later. Deferring the payment of taxes to a future year is like getting a free loan from the government. There are many ways to do this, from postponing an employer's bonus to investing in IRAs and other retirement accounts. A tax credit score is a greenback for greenback discount on your real tax invoice, rather than a tax deduction, which clearly reduces how plenty of your profits receive tax. It's surely discovered cash. Due to the fact if a credit score reduces your tax invoice underneath zero, the IRS would possibly refund a few or all of the cash to you. Rely on the credit score. Give it away. Charitable contributions are deductible, and that they don't even should be in cash. If you've donated clothes, foods, antiques, wearing equipment, or family items, for example, the ones matters can decrease your tax invoice in the event that they went to a bona fide charity and you obtain a receipt. Many tax software program packages consist of modules that estimate the cost of every object you donate, so make a listing earlier, then you drop off the massive bag or stuff at Goodwill. It could upload as much as massive deductions. Keep a record of your scientific charges. If you've been with inside the sanatorium or had different high-priced scientific or dental care, hold the one's receipt. In general, you could deduct certified scientific charges which might be greater than 7.5% of your adjusted gross earning for the tax year. So, for example, in case your adjusted gross earning are $40,000, whatever past the first $3,000 of your scientific bills, 7.5% of your AGI may be deductible. If you rang up $10,000 in scientific bills, $7,000 of it's able to be deductible on this example. Sell the ones puppies weighing down your portfolio. Knowing you're getting a tax deduction may make it a bit less difficult to dump a number of the once terrible inventory choices which have been weighing down your portfolio. You can deduct losses on inventory sales, which could offset any taxable capital profits you would possibly have. The restriction on that offset is $3,000 or $1,500 for married couples submitting separately. One different note: never allow tax avoidance to turn out to be an alternative choice for smart investing. Sell an inventory most effective if it certainly doesn't paintings in your portfolio anymore. Don't do it simply to get a tax bracket, due to the fact if you make a decision to shop for lower back your inventory with 30 days, the IRS can take lower back your deduction. Get the timing right. From a tax perspective, there's a large distinction between doing something on December 31st and doing it in the afternoon later. If you realize an upcoming price goes to be tax deductible, consider whether or not you could pay for it this year in preference of subsequent year. Making January loan charge for December, for example, should provide you with an additional month really well worth of loan hobby to deduct this year. Similarly, in case you recognize you're close to the brink of the deduction of the medical price, shifting that root canal up would possibly make the ache extra bearable if the price abruptly turns into deductible too. So that's it for today's video. Please watch our playlist where I explain everything about finance related topics. Friends, do not forget to like, share, subscribe to the channel, and press the bell icon and click notification, all for more amazing videos. And do leave a comment in the comment section below. I'll be back with some more mind-blowing contents in the next video. Till then, bye.